Today, we are moving on. Day 10, I believe we are at. And we are going to be talking about trend lines, something that is so important, something that is very simple, and something that can help you lead to making hundreds to thousands of dollars in the stock market. We are building up and learning more every single day. This is, the lesson that we need currently to kind of get a good understanding of even some of the things we've talked about in the past with support and resistance, with bullishness and bearishness. And we're going to go into a recap a little bit more about some of those things to make sure you have a great understanding of what trend lines even are. Now, a lot of times people think, just because it's simple, it's not efficient. And that is not true whatsoever. A lot of the times in the stock market, guys, simple is better. Simple is best. I'm not here to complicate things to make myself sound more intelligent than what I have to be. I don't need to make things sound like it's space science, right? It doesn't have to be crazy. We can make things so simple, and that's where trend lines come in. That's where trend lines are a very simple strategy, but they lead to so much money because they work. And that's all it is. And a lot of times, guys, in stock trading and day trading, especially in penny stocks, we just want to be able to learn what everyone else is doing and then be able to get one step ahead of them. Now, trend lines is something that all beginners learn, is what all stock traders learn, is what all investors learn. And the thing is, this is going to work 9 out of 10 times because this is something that everybody knows. Now, as we talked about earlier in our past lessons, that if we learn what everyone else learns and everyone else follows the same patterns, well, then the stock market becomes very predictable. We'll talk about the OTC market, maybe a little bit in the future, but why don't I trade the OTC market as much? The OTC market consists of a lot of stocks that are very small. All right. Now, this is a little bit off track of trend lines, but I just want to, it'll wrap around. Again, a lot of the OTC stocks consist of stocks that are a penny, 2 penny, sometimes even underneath a penny per share, sub penny. Now, a lot of traders, guys, who are full-time traders, a lot of traders who are serious traders, they focus on stocks that are on the NASDAQ or the New York Stock Exchange or around that area. There are full-time traders who specialize in the OTC market, but I'm not a huge fan of that. And why am I not a huge fan of trading stocks in the OTC market? I'm not a huge fan of trading stocks in the OTC market because it consists of stocks that are so small in price. What type of people do you think that's going to attract? Most of the people that are down in the OTC market are people who opened up an account, realize they don't have enough money to trade with the regular plays that we play, which are, again, stocks from 25 cents all the way up to $10. But if you only have $500 in your account, $1,000 in your account, you're limited a lot, right? You need a little bit more capital to be able to make capital. So a lot of these traders go down to stocks that are only 10 cents so they can buy more shares. But these are beginner traders, right? These are traders who don't really know what's going on in the market. So imagine, again, we're trading with other traders who don't know what's going on in the market. Well, what moves stocks up and down? Stocks go up because people buy them. Stocks go down because people sell them. Support lines work out so well because people know where support lines are, and that's where other people buy. That's why the stock bounces. But imagine if we traded in a world that has no rules. We traded in a world where no one knew, because they're all beginners, and the most of them are beginners. That support and resistance aren't a thing there because people haven't ever been taught them. Why are stocks predictable? On the NASDAQ, New York Stock Exchange, that are $2, $3, $4, because people have the capital. And most likely, if you have the capital, you're most likely more of a serious trader because you don't want to lose that money. Now, is there the occasional just super rich guy that comes in, just blows this money? Yes. But most people are willing to learn the fundamentals. So if we go down and play stocks that no one knows the fundamentals, it's just chaos. It's crazy. What's more fun? Let's say if you guys are playing a pickup game of basketball. You guys are playing a pickup game of basketball and you guys are big basketball fans and you guys play basketball a lot. What's more fun? Playing with people who know the rules, or playing with, a whole bunch of, let's say, foreign exchange people who have never, seen basketball before in their life? You pass them the basketball, they pick it up, run halfway through the court, drop kick it over the fence. It's like, you don't want to be playing with people who have never, played before, right? It's not fun. It's like, let's have a good game, right? So that's why we want to be and understand, or we want to be with traders who know how to trade, and we want to be understanding what everyone else is doing. And this is where it all kind of wraps back up. I'm saying before that, trend lines are very simple, but it's one of the things that a lot of traders learn. And since so many traders learn it, it works out so well. Right, it works out over and over and over again. So let's dive into this a little bit more, and we'll talk about the OTC market and more about buying and selling due to psychology as we move over to mob lessons and psychology lessons in the near future. But let's dive into our trend line lessons right now. So first things first, guys, is what is a trend line? Right? What is a trend line? A trend line is drawn over pivot highs or under pivot lows to shows the prevailing direction of price. Trend lines are a visual representation of support and resistance in any time frame. They show direction and speed of price and also describe patterns during periods of price contraction. So what are the kind of the big things I want you guys to take right out of this right now? The big things I want you guys to take out of this is that A, they can happen in any time frame. Right? We taught you guys about the 200-day moving average. We taught you guys about the 50-day moving average. We taught you guys about the 13 EMA. Where do we use those? We use those only on the daily chart, right? We taught you about the VWAP. Where do we use that? We can use that on any time frame. We taught you about the RSI. That only happens on the daily chart. Trend lines can happen on any time frame. You usually want to be in the correct time frame, though, while using trend lines. And what do I mean by that? Again, start with the 1 minute, go to the 2 minute, go to the 3 minute, go to the 5 minute. We went over that earlier, I believe, in like day 6. So we want to make sure that we are in the correct time frame, but you can use a trend line on any sort of time frame. Now, a trend line, how we are going to make this work is we are going to connect the dots, basically. You guys ever sit down as a kid, sometimes at a restaurant, like at a Friendly's, they'll give you this, or sometimes if you're a kid in class, and it'll just be like, hey, connect the dots. And at the end of the connecting all the dots, it forms like a dinosaur or some sort of picture. It's the same concept. Only in this case, instead of getting a lollipop at the end, you get paid. All right? So that's all we're looking for. We're looking for the areas of pivot points, and that's where we connect these. Now, let's not make this too complicated. I know if you've never seen a trend line before, that could sound a little confusing. Don't worry. We're going to break it down, make it very simple for you. So there are 2 different types of trend lines. First one, guys, we are going to be having an uptrend. Right? An uptrend. An uptrend line has a positive slope and is formed by connecting 2 or more low points. The second low point must be higher than the first for the line to have a positive slope. Note, at least 3 points must be connected before the line is considered to be a valid trend line. So when we have a trend line, guys, we have point A, point B. That would start an uptrend. We can connect these 2 points. Once we have point C that connects another trend, that is where we have a validation of this is currently a trend line. Uptrend lines act as support and indicate that net demand less supply, is increasing even as the price rises. A rising price combined with the increasing demand is very bullish and shows a strong determination on the part of the buyers. As long as prices remain above the trend line, the uptrend is considered solid and intact. A break below the uptrend line indicates that the net demand has weakened and a change in trend could be imminent. So what would be an example of this, guys? Very simple stuff right here. What do we have? This is an uptrend. Right, this is an example of an uptrend. It shows that the stock is moving on up. And as you guys can see right here, we have our first point, we have our second point, we have our third point. And that is where we can connect all the dots, and we could see we have a very nice uptrend. Now, you could see if we follow this trend, it actually starts, it goes all the way to the bottom right here. We have another little trend line forming where if we want to connect the 1 dot right here, the 2 dot right here, and the 3 dot right here, that would be another trend line forming. You can have multiple trend lines. You always want to find the daily trend line. This would be, the immediate one right here, as that's always the strongest. But if you see another trend line forming and you're looking for a quick play, you can always play this trend line. So what do trend lines represent? What do uptrends represent? These are going to represent support. Okay. Whenever we have an uptrend, this is representing that the stock is obviously moving up, and this is going to really be representing support. We put our trend line in, and we could see we bounce, and you can 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 see we bounce and bounce and bounce. And, as long as this stock holds above this uptrend, we're good to go, right? We talked about this basically for like the 13 EMA, the flexible trend line, remember? And as long as the stock stays above the 13 EMA, we're okay. We're good to go. So right here, if we're looking at this play in this picture right here, it's EMC. This stock is holding above its trend line. And there's no reason to sell until that trend line cracks, right? So if you're, let's say holding the stock and you start getting a little nervous as it falls right here, you don't have to. You know why? Because it's still above this blue line. And let's say you're holding right here and all of a sudden it starts falling right here. And you're saying to yourself, oh boy, I should sell right here. We've had a couple red days in a row. You don't have to. You're still above this blue line, right? And you can hold and hold and hold. And yep, even right here, you can still hold and hold and hold and hold. So how many of us before have gotten into a play and what has happened? We got scared on some sort of pullback. We saw the stock fall a little bit and we got scared it was going to dump, so we got out of it. Well, if we placed an uptrend on the stock, we would be able to understand that we may have not needed to get out of that play because it's still considered bullish at this time, right? Now, let's move on to the opposite of this. So we have uptrends, which is support. Then we have downtrends, right? So what is a downtrend? A downtrend line has a negative slope and is formed by connecting two or more high points. The second high must be lower than the first for the line to have a negative slope. Note that at least 3 points must be connected before the line is considered to be a valid trend line. Same exact thing, guys. You need 3 points. Once you find 2 points, you're saying to yourself, all right, I have my first 2 dots. Now let's see if we have a third point, be able to bounce off this line. And then you really validate that this is going to be a very nice trend line. Number 2, downtrend lines act as resistance and indicate that a net supply less demand, is increasing even as the price declines. A declining price combined with increasing supply is very bearish and shows that the strong resolve of the sellers as long as prices remain below and the downtrend line. The downtrend is solid and intact. A break above the downtrend line indicates that the net supply is decreasing and that a change of trend could be imminent. So what we have right here, guys, is a downtrend. Notice, just the opposite, right? We have a stock that is starting to fall. We have our 1 point right here, right? And you could see we come up towards the moving average, or we come up to the downtrend, we fall. Come up to the downtrend, we fall. We come up to the downtrend, we fall. We come up to the downtrend, we fall. We come up to the downtrend, we fall. Come up to it, we fall. We come up to it, we fall. And finally, you can see we break right here. And then we can actually add a line if we wanted to turn this into what? A brand new uptrend. I think I actually can do that. Let me see right here. Laser pointer pen. Let's see. Yeah, I can actually, what we have this downtrend, obviously, cracking right here. But what could we actually do right now? We could actually connect this if we wanted to, actually form some sort of new uptrend on display, right? So when we have our downtrend, we have our first point, we have our second point, we have our third point, and we can see it just holds down, 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 down. So if you are shorting the stock, still hold the short. Still hold the short. You have no reason to sell right now. No reason. Close. No reason to sell. Close. No reason to sell. No reason to sell. No reason to sell. Nope, 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 nope. All right, now get out of your short. Get out of your short here. But look what happened. You got in on this play all the way up at like $100. You're getting out of this at 10. That's like, you know how profitable that short is? That is insane, right? Same exact thing. If you buy the stock at $2.50, you're good to hold. You're good to hold. No reason to sell. No reason to sell. No reason to sell. No reason to sell. So look how profitable this is, because we never had a reason to get out of this play yet. And we just went from $2.50 all the way up to $60, all the way up to $60 right here. How insane is that? How awesome is that? And it's not until what happens? The trend line breaks where it starts falling back on down. So we always want to hold until that trend line cracks. When that trend line cracks to the downside, well, people are going to short. When the trend line cracks to the upside or breaks to the upside, that's when people are going to buy. So we always want to be studying our trend lines. So validation. What do we have right here, guys? Validation. It takes 2 or more points to draw a trend line. The more points used to draw the trend line, the more validity or validation attached to the support and resistance level represented by the trend line. It can sometimes be difficult to find more than 2 points from which to construct a trend line. Even though trend lines are an important aspect of technical analysis, it is not always possible to draw trend lines on every price chart. Sometimes the low or highs just don't match up, and it is best not to force the issue. The general rule in technical analysis is that it takes 2 points to draw a trend line and a third point to confirm it. So what we have right here, guys, is something that we have been talking about, right? We want to have 3 points to confirm what we already know right here, right? And that's that we have a trend line. So if we're looking at our first point, right, we have our first point right here, our second point right here, we can connect the dots on this play. And we could say to ourselves, all right, let's hold this as a trend line. But the third point is going to really show that it is correct. 1, 2, 3. And the third point is going to show that, okay, this is a good trend line. A lot of traders, especially when you get a little bit more experience, they're going to do what? You're going to be able to see the first one and the second one, and you're going to say to yourself, all right, I'm good to hold. And you could just draw this whole entire trend line, even though it's only right here. You can just extend it if you want to. Even though it's not here yet, this is the future. You can extend it all the way up here as if it's going to work out, right? So, a lot of people just, start doing it a little bit early as well before it starts coming back on down. You could see, okay, I'm correct, and it goes on this massive spike. But again, this stock went from $37 all the way up to $60, all from just holding a very nice trend line. So, what we've got so far, we know we have uptrends, right? We know we have downtrends. Uptrends we hold until it cracks that support line. Downtrends are going to hold until it breaks through the resistance line. Downtrends act as resistance. Uptrends hold up as support. Now, we always want to have a validation. You can start drawing your trend line after 2 points, but the third one, the fourth one, the fifth one, it's going to only get stronger and stronger and makes you more confident as well as the stock goes on. So the big question I get a lot of times, guys, is how? How do we draw trend lines, right? People always ask me this, how do I draw trend lines? Do we connect just the bodies of it? Do we connect the shadows of it? How do we draw trend lines to make them as easy as possible? So let's draw one, right? Let's see what we have here. Let's draw. Let's just go with discard right here. Cool. So let's draw a trend line. Well, first off, do we have any sort of examples? We can just go right here. IGLD. Great, easy example. Number 2 top gainer in the market right now. Stock is currently up 31%. How would we draw a trend line? Well, most trend lines, guys, are on the same angle. And what do I mean by that? Is most trend lines aren't going to be just sticking straight up or straight down, right? We are going to have somewhere probably right around this like 135-degree angle, right? If we have, let me draw this out, right? If we have, this would be a right angle, right? We could have like an acute angle, or we would have, like an obtuse angle. What we're looking for is more of this section right here, this obtuse angle. Okay, so if you guys are big into geometry or anything like that, that's kind of what what we're more looking for. Trend lines are never just straight up. A straight up is not a trend line. Okay, so something that I want you guys to always understand: if you see a stock and your trend line looks like this, that's not a trend line. That's just a spike, and it's going to be falling right through your trend line. A trend line is more going to be a gradual climb. And a lot of times, guys, once you put it right on, this sort of angle right here, and again, we're imagining if this is, the obtuse angle, right? What are we going to do? All we're going to do is just slide it on up. I always imagine if this is a boulder, or not a boulder. Imagine if this is a bulldozer, like pushing snow, right? That's all we're doing. We're just pushing our snow through the street, pushing our snow, and then what do we get? We get right to the curb, boop, and then we're backing up, the dump truck. We're all set here, right? But what are we doing? There's our uptrend right here. And we can adjust slightly, make it a little bit bigger, make it easier to see. And all we're going to be able to do on IGLD, all we have to do is hold IGLD until this trend line breaks, right? Until this trend line, breaks on off, we are good to hold this line. And you could see it comes right here, bounces once and goes on up, bounces twice and goes on up, bounces 3 times, bounces 4 times, bounces 5 times, and keeps going all the way on up, right? So IGLD, the stock has continued to move. The stock has continued to run. The stock is still continuing to make its rip on up. So, that's so great that we could see I don't need to sell the stock until where? Until it comes down to 47 cents. So how do we draw this? How did we do this? We're not, again, just putting it on bodies or lower shadows of the candle. It's a mixture of both. What's the common consensus area? What's the common consensus area of this play? Well, we have a little bit of a start right here. It bounced right here, bounced right here, bounced right here, right? That's a lower shadow right here. That's a body of a candle right here. That's a lower shadow right here, right? Your trend line is not going to look like what? Your trend line is not going to look like this. You don't draw trend lines that are just like, all right, only bodies of the candle. And you're like, all right, body of the candle. Well, then it kind of goes like that, and then kind of, is this? Got to stay up there. That's not a trend line, right? So that's not a trend line at all. Now, maybe again, if you're looking at the daily chart, you see some sort of VWAP, right? And the VWAP is going to be what we call the flexible trend line, where it may be a little bit more different, right? Where the VWAP isn't straight, right? The VWAP isn't 100% straight, or excuse me, the 13 EMA. Sometimes the 13 EMA or even the VWAP's not as straight. Sometimes you might see a little bit of movement, something along this line, which will give some sort of uptrend, but it's not that straight hardcore uptrend. 13 EMA or VWAP, and that's okay. But if we're just drawing trend lines on our charts, guys, all we're looking for is, again, put the trend line up, go ahead, put it, right on that nice angle, and you can really just, feel it out right here. And a lot of times, what do? All you're going to do right here is just, what I like to do is just start down low and just push it right on up. Bulldozing that snow, putting it right, do. Connect, 2 dots I see, and then adjust from there. So I like to connect the 2 dots, adjust, right? Adjust right here, back it up a little bit, boom. There's my trend line, right? And I can see it's a very simple, very easy thing. So it's not just lower shadows. It's not just real bodies of the candle. It's going to be a mixture of both. What's the common area? What makes sense, right? Don't overcomplicate it, right? Make it simple. Make it easy for yourself. There's no reason to make things more complicated than they have to be, right? All right. So let's get back to where we are. What else do we want to know? Well, now that we know how to draw them, now that we know what they are, how do we play them? Right? How do we play a trend line? Well, we must understand what's bullish and bearishness. And we have been talking about bullishness and bearishness. So you guys should have, a good understanding of it. But really, we're just holding until the trend line breaks to the other side, right? We know what trend lines are, right? We know how to place a trend line, right? Now we just want to know, how do we make money off of them? Well, we must understand what's bullish and what's bearish first off, and then we're just going to hold until the trend line breaks to the other side. So what's bullishness? If you guys still don't know, a bull market is the condition of a financial market of a group of securities in which prices are rising or expected to rise. The term bull market is most often used to refer to the stock market, but can be applied to anything that is traded, such as bonds, real estate, currencies, and commodities. Because prices of securities rise and fall essentially continuously during a trading day, the term bull market is typically reserved for extended periods in which a large portion of securities priced are rising. Bull markets tend to last for months or even years. So let's just keep it simple. If someone says that a stock is bullishness, it means they're moving it up. Okay, so I like to keep things as simple as possible. Someone says the stock's bullish, they're saying the stock is moving on up. It's as really as simple as that, guys. I like to give you guys the actual definition, and I like to give you guys the Dekmar trades definition, right? I would hate, back when I was in, high school or college where, my teacher or my professor, whoever it would be like, all right, today's, this equation, what you have to do, we're going to definitely be dividing by the square root of the astronomical x, y, z. If z is not placed over the apostrophe, over the scientific modern theory, we are not getting the correct answer. And I'm just like, what did he just talk about? My friend just leans over and just like, oh, just place that number to the left. And it's like, okay, great. Why didn't he just say that? Right? So let's keep it simple, right? Someone says bullish means the stock's moving on up. right? Bearishness, a bear market. What does that mean? When we're in a bear market, or someone's saying a stock is bearishness, is a condition in which security prices fall, right? We're seeing, in a bear market, it's when prices fall 20% or more from recent highs and amid widespread permission of negative investor sentiment. Typically, bear markets are associated with declines in an overall market or index like the S&P 500, but individual securities or commodities can be considered to be in a bear market if they experience a decline of 20% or more of a sustained period of time, typically 2 months or more. Let's keep it simple. If someone says the stock is bearishness, right? What does that mean? It means the stock is moving down. Bullishness going up, bearishness, the stock is moving on down. So we just learned about bullishness and bearishness. We learned about how to draw trend lines. We learned about validation. We learned about uptrends. We learned about downtrends. Now, again, how do we make money? Well, all we do right here, guys, we hold the trend line until it breaks to the other side. So whatever we're doing, we can make money both ways. For example, SPHS. The stock is moving up, 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 up. And what do we have? Finally, again, the stock cracks and moves down to the other side, right? So we're moving up, 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 up. The stock cracks and moves down to the other side. If we are on the long side, we are good to hold. We are good to hold. We are good to hold. We are good to hold, right? So we are constantly just holding these plays, holding, 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 holding. And the moment it cracks, this is where we sell. So if I buy here, if I buy here, if I buy here, if I buy here, even if I buy here, I do not need to sell the stock until what happens? Until this cracks. But we do know when it does crack, that's when we're going to be seeing a very strong reversal, because every person who understands trend lines, which is, a lot of traders, because if there's 100 people in the stock market, it's going to be about 90 of them, right? So SPHS, what we have right here is that this play going from bullishness to bearishness at this time, what are we going to know? Oh, I know it's going to be seeing a reversal. I'm going to lock in my profit. You say to yourself, oh, I know the stock's going to have a reversal. I need to lock in my profit. That guy says to himself, oh, I know the stock's going to have a reversal. I need to lock in my profit. So what do you think's happening? Everyone's locking in their profits. Everyone has stop losses right underneath this trend line. People start shorting as they know that people are going to start selling this off. So how it comes all down to kind of psychology at this point is that we're all holding because we know we're good. But the moment this trend line cracks is the moment that what happens. I sell, everyone else sells, other people have stop losses getting hit, my stop loss gets hit, people start shorting the stock, and it just is a complete turn in mindset about which way this play is going to be going, right? And that's where people short this play on down. But you're good to hold until that trend line breaks. Let's say you buy right here. You don't need to sell on this pullback. You don't need to sell on this pullback. You don't need to sell on this pullback, right? What happens? The stock finally, again, does what? The stock finally cracks this trend line right here. I have my stop loss. You have your stop loss. You start selling. I start selling. People start shorting. And the stock goes all the way down towards that 944 mark, right? Look at the complete turn. And now we're going to be on some sort of downtrend, right? Same exact thing right here. AQST. The stock's moving up. Good. Bounce. Good. Again, body, lower shadow, body. What happens right here? Trend line. Trend line reversal. What happens? Sellers, shorters, stop losses, now on a downtrend. Does this make sense for everyone? So I just want to make sure you guys, understand this. You guys get a complete understanding of what's going on right here, an education about trend lines, how they're profitable, and of course, how you guys can make money. Now, if you have any questions, please ask. But again, that's going to be wrapping up our day 10 bootcamp lesson on our trend lines. Awesome job, team. Hope you guys enjoyed that one. Moving on to day 11, starting up tomorrow with, again, another great lesson. And you can see IGLD still holding this trend line. Absolutely awesome. Absolutely great.